Awesome. Yeah. So again, I'm paraphrasing. I think I'm generally catching the gist of the question, which is how do you handle exposures that don't backtest well within a quad if they move from to say bullish trend. We actually had a really good example. This actually happened basically at the beginning of 2022. Celts, if you don't mind pulling up that, yeah, perfect, man. So we had this kind of happen, and at the end of the day, the signal trumps the quad. I've said this many times, I got it from Keith, so I'll give him obviously full. He gets full credit, but I've also repeated this statement on Weekly Notebook Review. I've said it probably here on ABG a number of times. And so, yeah, signal trumps the quad. These are back tests, right? So for every positive or negative kind of back test, or so if it back tests negatively in that, a quad environment, there's like the yin and yang type situation, right? So on the yang side, they could be positive in the quad. So there's always a kind of the flip side to whatever typically back tests most or higher, with a higher probability. There are times where you'll get the lower probability outcome that hits. So we did pivot to adding energy back into the portfolio. So I think the question also included, like, would you actually include something that isn't typically, or that doesn't technically backtest into the portfolio very well, that doesn't backtest traditionally into the quads? 100%. I mean, we are absolutely signal first, front runs the quads, and that's how we'll always be. So I think the VASP, right, is provides the flexibility to do so, right? So like we'll follow the VASP. It gives us that flexibility to kind of go anywhere, to pivot when we need to pivot. But obviously the quad framework definitely gives us the kind of the way that I think I've talked to many subscribers about is it's almost like it narrows down the hunting ground, right? So if you've got like 1,000 acres worth of land to go hunt, right? I'm actually not a hunter, so I don't know why I went with this analogy. But if you got 1,000 acres of land to hunt, and I actually don't know if that's a lot or a little, but let's just say you got 1,000 acres of land to hunt, right? The quads kind of narrow it down to the 250 acres where likely has the highest probability of actually killing something or finding whatever you're trying to hunt, right? So that's kind of, I guess, probably the best way to kind of think about it is like narrowing it down to the highest probability outcomes that back test. So on a kind of traditional basis, but you also have to remember this is a very new environment in terms of a quad 4, right? Like we're going from one of the most epic kind of quad 2 environments in terms of massive stimulus packages that the global economy has really ever seen, and now we're kind of on the flip side of that, trying to manage inflation that has really that elevated and now is kind of staying stickier for longer with a treasury, with a U.S. 2-year treasury, aka fixed income or global rates. In the U.S., that's gone from 0%, call it, to almost 5% here. So again, these are like massive moves. They're new dynamics. We're navigating them every day. That's why you watch the macro show. That's why you're here listening to Hedgeye. That's why we have Keith as our guiding light, the entire analyst team to help kind of navigate the sectors, all that kind of stuff, right? So we've got the macro team digesting all the global data. When those start to shift and the signal picks it up, it's going to be, we will certainly let you know first, right? And Keith will let you know first. And he did so with Turkey, right? For whatever reason, the signal picked it up, he got out, and it dropped. So, he did it with Turkey. He's done it with utilities as well, as another probably better example, right? Utilities actually do backtest well in a quad 4 environment. We were long them for a period of time, and then we pivoted out of them once that signal started to weaken and break down. So again, I think it goes for things that both backtest well and don't backtest well. I mean, things that typically traditionally backtest well in a quad 4 that typically work would be utilities, healthcare, staples. Those three things are all bearish trend at the moment. So again, there's no real reason why they're bearish trend, or there's certainly I should say, there's reasons why they're bearish trend, but do you really want to focus on the why and rather just like when that happened, right? When they started to lose signal strength. I think if you spend more energy trying to master when things start to pivot or when things start to break down, you're going to have a lot higher success rate in executing within the portfolio and generating better returns. So again, Keith says this all the time. It's about the when, not the why. I think that's really, really critical to really kind of evaluate and to make sure that you're executing that at home, right? So do your best to build a process, build systems in place, or evaluate things on the screen that help you navigate, when to sort of start to reduce position sizing or to increase position sizing, right? And that kind of segues into a bit of the next question, but I just want to finish my thought here is that, we have a lot of tools in place and a lot of products that help you do that. There's tools in the toolbox, right? Like, there's been a decent amount of chatter, and Keith talked about it on the call this morning and even on the macro show about the red eye, green eye situation or app that we launched a week ago. This is just another tool in the toolbox, right? Like, don't overcomplicate things. Try to keep things as simple as possible. And he's got like basically 3 things he can show you on that red eye, green eye. It's green for buy, Z for snoozing, and aka like just wait and watch, and then red aka sell. So that's one tool, but you combine that one tool, like if he's saying sell, along with RTAs, and then the risk ranges, and then the early look, and then the macro show, and then perhaps the morning shift or the re-rank product, and you can really get a full picture as to what's actually transpiring inside of the portfolio, what kind of moves are, or what positions or what pieces of inventory are starting to pick up signal strength, right, or lose signal strength. Keith said yesterday that GDX was a 1% position size. Did you write that down? I did. It's literally right here in my notebook, right? Here's my notebook, right there. It's GDX, 1% position size. He said it. If you missed it, then that's cool. But sorry, I don't mean that in a mean way. I just said if you missed it, then that's okay. But you also have to understand that putting these tools together helps build a better house, a better foundation, and helps you execute better, right? So these are all things. Again, I'm not trying to preach here, but these are all things that you can put together and really try to be quite successful at this game and leveraging our investment research and putting it into practice.